Factors influencing the capital budgeting decisions, objectives of capital budgeting. The capital budgeting decisions influenced by various elements present in the internal and external business environment. First, capital structure. The company capital structure, the composition of shareholders' funds and borrowed funds determines the capital budgeting decisions. Second, working capital. The availability of capital required by the company to carry out day-to-day business operations influences in the long-term decisions. Thirdly, capital return. The management estimates the expected return from the prospective capital invested while planning the company capital budget. Fourth, availability of funds. The company potential for capital budgeting is depend on its individual independent dividend policy. That was availability of funds and availability to acquire funds from the other sources. Earnings. If the company has a stable earning, it may plan for massive investment projects and leveraged funds, but the same is not suitable in case of irregular earnings. Next, lending policies of financial institutions. The term on which financial institutions provide loans, such as interest rate, collateral, duration, contributes to capital budgeting decisions. Next, management decisions. The decision of the management to take a risk and invest funds in the high value or holding some other plan also determines the capital budgeting of the company. Needs, project needs. The company needs to consider all the essentials of the new projects, also the means to fulfill the requirements along with the estimate of the related expenses should be clear. Accounting methods. The accounting rules, principles, and methods of the company are another factor considered while capital budgeting to frame the reporting of such expenses and revenue that need to be generated in the future. Government policy. The restrictions imposed on the exemptions allowed by the government to the companies while investing in the capital structure impacts the company's capital budgeting ratio. Taxation policy. The taxation procedure and policy of the country also influences the long-term investment decision of the firm since additional capital will be required for such expenses. Project economic value. The total cost estimated for the long-term investment and the capacity of the company determines the capital budgeting and capital budgeting decisions.